Yo guys, what's going on? Welcome back to another weekly forecast slash breakdown. And before we get started, I'm going to quickly run through the VIP results. All right, here as you can see that this week was a bit of a hard week for us to trade in terms of gold in obviously in consolidation. We obviously started on Monday was a 1-to-1 trade that we ended up catching, which was 0.5% on gold. And then Tuesday and Wednesday we were on the wrong side of the market, and I'm going to explain that later. And then we had Friday, which was obviously NFP, where we just recovered some gains back from the market, but obviously wasn't enough to get us back up above break even. But it's all good. Obviously, we end up catching our losses at times, but it's all about how it's managed. As you can see here, this whole week was a minus 1%, which is quite contained and quite safe in respective to how things can get out of hand very quickly on trading. But what I'm going to do is I'm going to sort of jump into the charts, quickly explain what we were expecting last week, what actually happened, and explain what was my sort of thought process as going throughout the week, so you guys can understand why I send these setups, obviously for the people in VIP. And I did send some on the free channel, which didn't work out as well. But this is what I'm going to sort of go through and explain, obviously. But anyway, let's just get started. You can see here with this blue line marked here, this is where the sort of week started off. The expectation going into this week was we were looking to get a retracement at least around about 50%, retesting this bearish sort of order block to then get a continuation down. Why? Because obviously the price was continuing down. It created obviously equal lows here. Price broke those equal lows at the start of the month, start of the week, sorry, and start of the month as well, yeah. And price then immediately pushed up. And what ended up happening on Monday, it did push up quite high, which we ended up waiting for a sell position where we ended up catching that sell position, but price ended up pushing back up and continuing a little higher. So obviously we were out at break even, and then what happened overnight is price consolidated, and then Tuesday we ended up getting a big push down, just at London session, where price ended up retracing quite a lot of Monday's move. Now it's around about this area where we were thinking that okay, what we could get is we could get an early retracement in London and a continuation back above, up above towards these highs here. But what we didn't do is London US session didn't show that sort of bullishness, and then ended up breaking when we had the PMI news. Sorry, it was the job openings where price ended up pushing down here, retested, and continued pushing down back towards these lows here. Now, it was at this point where when price is at these lows, I lined up this low here and I noticed that it was an equal low. So this was the approach I was taking throughout Tuesday and Wednesday, that no, price is likely to keep pushing down to break below this equal low here. And this is a liquidity level. And usually when liquidity levels are left, they're usually taken out first and then price pushes up. So what I ended up going through was obviously placing a sell limit overnight. If price sort of pushes back into this level, I would like to see a quick reaction back down, break structure, and this will then attack those lows quite quickly. What ended up happening overnight is price then continued and pushed back above here. It was at this point where we should have started switching to start looking for bullish price action. Why? Because this here is a breaker block, and the breaker block has now been broken, and it was just all because of this relatively equal lows that ended up putting me off and midweek. And sometimes the analysis does get like that. It doesn't get like that quite often, but it's what the market's there designed for. It's not supposed to be easy when you analyze. It's supposed to sort of trick you into thinking that, right, yeah, there's liquidity left there, but what ended up happening was this was actually a rejection block, and this is what I was explaining on the midweek forecast, is that price ended up pushing below it, and it's the bodies that made us aware that no, price is actually going to start turning around. So I did some research, did some analysis, and then found out that what these bodies means that because they closed below the previous bodies here, and they closed within the wicks, and then we also got a break of structure above this green line. This was where your confirmation was, where price was not going to come back to this level, and it's likely to push towards these highs here. And then obviously we ended up getting a retest, and then London session, and then US session here was your buying opportunities. But what were we doing? we were selling. Why? Because we were looking to target these lows still. So the bias is still there. Obviously, after Wednesday, what did I do? We took those losses. It was like, I think it was like, let me go back to the channel. It's about 2.5% in total. So I decided to go and clean the chart, have a look at why price didn't do that back test, and see what actually did happen. And then when I did analyze it, I was like, oh, now it makes sense. So that in that scenario, after that, it didn't feel, my psychology started to improve, my mindset started to improve. Like, when you sort of make your losses and now you sort of fear of getting back in, but now it's just like, oh, I get it. It was just a mistake on my end. Okay, mistakes happen. Let's move on. Let's get back into it. So what I did is on Tuesday, as price sort of climbed up here, going into Thursday, we ended up getting this pullback and then price continued pushing up. I missed out Thursday just to give me that sort of clear mindset going into Friday. I would like to sort of just stay away from the market, let me fully reset and then jump back in. And then obviously came Friday, and then London session ended up collapsing price. Price came around about this area here. We monitored. It was too bearish to enter. Price came down. Now it's NFP. Price pushed all the way back below the relatively equal lows, which were actually left as well, because it's a relatively equal low on the daily. So price ended up coming straight back down for that after taking out the prior highs on this consolidation. So you can say if we zoom out here and I sort of just remove these, and I'm going to quickly show you what it certainly looks like price is sort of doing. You can see this green line here represents the liquidity from the buy side. This liquidity here will represent the sell side liquidity. So as people are basically, as people were selling here, every time they would sell, they would place their SLs above each of these highs. So if they entered here, the SL would be up there. If they entered here, the SLs will be up there. So these stop losses and buy stops were sort of building up above these highs here. So as price tapped into these, it did collect the liquidity, price pushed down, but it wasn't enough to break structure here. So then Thursday pushed up higher, and now that we've cleared everything, and also we look towards the left, we also have your breaker block as well on the daily time frame. And then this is something I was sending to VIP and saying that if you look at the daily time frame, what is price doing? At the time before, let me just go to the 4 hour, it was easier. At the time before this whole drop, if we just put that towards one side and then look at what price is doing, you can see that we have obviously your high, you have your low, you have your high there, that's higher than that one, and now your lows at the moment are still climbing. So you can see that's why price is pushing up, but we need to look at where could price reverse, and the first point was this breaker block. And this is why I was watching this at London session. So once price got into this and then you ended up getting that big drop at London, this is where, okay, right, we're getting that reaction off London session. We may get a push back down towards these equal lows here, and then potentially, as I was saying on last week's forecast, this consolidation low right there. And what did we end up getting? Price ended up going there, NFP pushed down to these lows. We ended up having a retest around this area, and then price continued pushing lower back below these lows. So that was sort of the breakdown on what ended up happening within the market. See, live markets are a lot harder when you trade them live, obviously, rather than looking back at them after and using hindsight saying, yeah, that's what I did. But the thing is, it's just training your mind. You want to train your mind and train your eyes to see these things before they happen. And for me, on this occasion, because I was looking at this double bottom early than it should have been. So I was looking at these double bottoms being taken out here, when in fact it actually took out the highs first, then took out the low. So it was just a little too early, which ended up offsetting me for the whole week. So I ended up taking a day, coming back on Friday, and then we ended up sort of recuperating something. But it wasn't enough. But it's okay. It's only minus 1%. You know, everyone's lost minus 1%. I'm sure of it, at least once in their trading career. So everyone understands that it's easily to recover from that, and that's what we're going to go do back into next week. But anyway, we're going to go jump into the weekly forecast now, and if you haven't already, be sure to subscribe to the free channel. The link is in the description if you want some more analysis like this. It's all free, and I'm sending it on Telegram as well. If you guys would like to join VIP through our broker, please do so. Links and everything is all in the description as well. And you end up getting a 50% first time deposit bonus, so you can basically take advantage of the boost and increase your capital. It's free money, and you get to use that on Forexy, and I use Forexy as well myself, so I haven't had any complaints so far. And then as well, the link to the VIP is also in the description. Right, let's get straight into the weekly forecast. Now, going after this big drop that we ended up getting on NFP, what is price likely to do? So if we look at the daily time frame and just have that sort of zoomed out perspective, the main aim going into next week is to find out what the weekly candle will do. That's all we want to see. You can see the weekly candle here, price pushed up, collected liquidity from prior week, and then ended up pushing down, breaking that low of the prior week. So I collected it from both sides. Going into this week, we now have a bearish order block created from the NFP candle. We have this low, which will likely get taken out, so 22.75. So if you look at the 4-hour time frame, and now have a look at what price is doing. It's collected that low. This low has now been collected. So now what we're going to do is we're going to sort of freshly mark our charts. So the way I do it is just have a look at the previous highs and lows. So currently the main high at the moment is this high here at 24.48. Yeah, this high now, which is now buy side. So I'm just going to mark that up. This is just how I sort of mark my charts. And we have this key low here, which has not been untouched. So what we're likely to get on Monday is we could get an instant push down, breaking this low here. Now what this will do is this will set us into a bearish market structure. The reason why I say this is because price has failed to break higher here. And what's it doing? It's breaking lower. So this is a sort of change of character where you see price pushing up, and here price fails to break higher as an uptrend. Price rejects off a breaker block here, pushes straight down, and now you can see that once price goes below this low, we don't want to see this area break. This is your new sort of bearish support resistance level. All you want to see is price retrace this level to push lower. Okay, so it's as simple as that. You want to see sort of price not break this level. So this is the key level here. So I'm going to mark it here with a box and bring it across. I'm going to get rid of the box behind it because it's done that now. So this is your key order block level that I'm going to be watching. And obviously price will want to retrace this. This is a very big drop that we end up having on Friday. So, but we still have that bearish momentum. So what could happen is on Monday, you'll get that initial push down immediately, breaking the prior lows, collecting all of the, the buyers that were in this structure, taking them out. And once that's ready, you want to see price sort of give that sort of breaker structure. This will give you that position to buy. Why? Because the liquidity below the previous low has been collected here now. So it's been taken out. We have a structure break. Price is pushed higher higher than the previous swing high. It's now retraced into a good area to buy, and then you're likely to place obviously your stop loss below there, and your targets will be a lot higher. So then that's sort of a setup for your buys. And then once you get that, you want to start looking for a retracement back up above your premium, back into premium, back above 50% of this retracement, of this impulsive move down. And then here you want to see your structure break. And once you see that structure break, like something like this, for example, you see a big spike up, you see a big spike down, and then you get that retracement. This is your sort of setup where now market is now shifting, and it wants to make that continuation below the previous low and wants to continue lower to continue that downtrend. So I hope that sort of makes sense in what is likely happening in the market. If you have a bad week, it doesn't matter. You usually would sort of reset, come back the next week, and you may even have a clearer view going into the new week. Why? Because although this was a lot choppy price action, we haven't had that in a long time. As you can see that we have like a little bit of consolidation here and here, but it wasn't as obviously as long as what we've had. It's been ages since we had sort of consolidation. I remember when gold used to be in consolidation all the time, like you can see from here, and it's just because it's been so long, we haven't had it. So a lot of people struggled in this sort of price action. It was either they were switching to bearish, bullish, bearish, bullish. They're switching, and it's fine to do that. You always want to sort of keep it in key and keep in sync with the market and always adapt. So whenever like say for example me, I'm looking for a sell setup or I'm looking for a buy setup. It doesn't mean I'm super bullish going for the next 5 years, for example. I'm bullish in that position, in that sort of setup at the time. If price breaks towards that SL, I could be switching to a bearish setup. An example was obviously on NFP where price was obviously pushing down. We ended up catching this little retracement here, and it was like 50 pip move, and then price ended up going back towards SL at entry, and then price continued down. So what did I do? I left the buy position and I let it continue falling. I think it was around about here. Sorry, not there. It was around about here, where we ended up getting that push back up, and then price ended up continuing down. So always take it. You want to sort of adjust in ways if you can't sort of handle these sort of losses and fear takes over and you start over gambling and you start sort of risking a lot more. What you want to do is you want to keep. I think I always suggest to the VIP members and even to the free members as well that you want to risk 0.5% to 1% per trade, and that way you'll have that discipline that if you do take 2-3 losses, it has not blown anything up. It has not ruined your account. You have lost say 3%. You can make that back in one trade if your risk reward is absolutely amazing. So it keeps that sort of hope there that okay, it's not all good. I remember I've traded with a few guys, and once they're sort of like say 2% left from blowing their prop firm account, they end up just max risking, and that's it. It's done. If they put about like say 5% on the trade, even though they can't, and they're just in negative, and then they just don't care. And I was talking to him, I'm like, why have you max risked? Although you were 2% left from blowing it, all you just needed was 2 or 3 trades to get you back to break even. 2 or 3 good trades to get you back to break even. And that stuff happens quite often with gold. You probably get one great setup a week. And although it would have been a slow, tedious process to get back to break even, a lot of people rather would waste a whole 100k, whole 200k account, and just say it doesn't matter, mine. I'll just make the money back and I'll just go again. But it doesn't work like that. That's basically tapping into the gambling part of when it comes to trading. You want to keep that risk managed, and that's how you'll get a lot further with your trading. It all matters about your psychology, and discipline is key. Discipline can get you far, and if you have the right mindset and discipline together, you're untouchable. When it comes to trading, you make losses, so what? You just go again. So that's the mindset I'm going in with next week. I know that okay, we had a slow week last week. Let's go and bounce it back, and then we can just make double or triple this week. That's all that matters. Obviously, I'm not putting pressure on myself to say that I'll make that, but we just take the process step by step. So obviously, first, I'm looking for a move down, look for a retracement here. If it's a break of structure and you're likely to see bullish sort of momentum, price is failing to break lower, then you likely can see price push up, retrace this whole move, and then you're looking to see some sort of bearish structure breaks, and then you're likely to see price push back down to continue lower. Looking at the daily quickly, I'm just going to quickly mark up. I know I've gone on for ages, but I thought I'd give some extra info, man. It's always good to give that extra information for free. And if you guys enjoy watching longer content, that's fine by me. Otherwise, just leave it in the comments if you want me to just be a bit more concise and shorter. Because I do want to make these sort of YouTube shorts as well, which will also help for, just the people who just want to see quick forecast and done. They don't want to spend too much time on these videos. But anyway, daily time frame, right? Just gonna mark this up right here. What do we have? We have daily fair value gap there, and then we have a little daily fair value gap a little higher up as well. But if I switch to the weekly time frame, we know that weekly we have this weekly fair value gap in here, which is obviously below the prior low. So this is the first target that I would like price to see before price starts to sort of give that retracement. You want to see price tap into a sort of supply zone, which obviously in this area we have a weekly fair value gap. We have a prior liquidity zone, swing low here. So once this gets broken, taps into this, you're likely to see buyers step back into the market, break some structure, hold some support here. This will give you that retracement. And then it's either obviously decision time, whether price, because price has broken a prior low here, we want to keep that bearish momentum going for price to push lower here. If price breaks above this level here, then we need to go and decide, okay, what's price doing? Because it's taking out the liquidity of the low, the next area is taking out the liquidity of the high. So if you get something like this, where you get price above the NFP highs, Friday high, and then you get a retracement, and price holds and continues pushing up, then you're likely to see something like that. So let me drop onto the 4-hour time frame so you guys can see that on our daily time frame will be better. Something like this. Yeah, so this is your two sort of scenarios going into it. You always have to cover plan B, and that's plan B. So plan A is the main one here that I'm going to be watching, which is the bearish continuation scenario for price to continue lower. And then you have plan B, where if price is way too bullish and wants to continue back above 23.87, you're likely to switch to that bullish scenario to continue to attack that all-time high. But I'm going to leave it right there. If you guys have watched it all the way through, that's absolutely amazing. Don't forget to subscribe, leave a like, and also comment on anything you want me to sort of talk about, or if you enjoyed this video and got some information out of it. Links are all in the description. It's been XAUUSD. Peace out.